Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of US markets for the session Friday going into NFP, and that will be the 6th of November, if I'm correct now. We are currently coming into the 6th of November 2015. Okay, NFP day. How do we react? How do we interpret? And what are we looking for, and all the potential moves and scenarios that can occur. Now, this video is being brought to you by CFDs.com, the leading spread betting and CFD brokerage. Be sure to visit www.cfds.com to learn more. Alternatively, you can visit the educational website and certainly obviously have access to the latest charts and analysis and videos that I'm obviously recording at present. Okay, interesting scenario on US markets today. This was on the back of obviously the Asian markets all up overnight, and basically towards the open of the S&P 500 we obviously witnessed some weakness. So bring up the 60-minute chart of the S&P 500 first of all, and I'll elaborate as to the price action, and then I'll explain in terms of chronological fundamental events. Okay, so basically you can see that we had a seesaw session. Okay, so basically from the get-go of the S&P 500, you can see that we closed basically around the 2102 level yesterday. Certainly found weakness. We did below to 2097. We did recover. Okay, initially we did pop higher at the level of at 3 o'clock. We did pop higher to 2106. We rejected that very quickly, and then the market subsequently sold off. We had a pivot low of 2090 before we recovered, and we stabilized above the well, basically around the 2100 region. Okay, so what happens now? We actually sold off based on the hawkish comments from Yellen. Okay, number one, that's the reason why we sold off, and also we had some economic data that basically justified the actual rate hike going forward. Now, the jobless claims actually came out slightly more than expected, so that was certainly a negative factor. And non-farm productivity certainly came out weaker. Unit labour costs came out weaker than expected, and that obviously sent the actual dollar lower to a large extent. And that obviously is not good news in terms of the actual inflation picture. Okay, and obviously continuous jobless claims as well, initial jobless claims as well, they certainly came out slightly to the negative side. But the overwhelming negative factor on the actual US markets was, number one, weaker German data, weaker EU data, and we also had concerns with regards to the Volkswagen scandal, certainly obviously being spread out to other areas. So we've got obviously the petrol vehicles as well, and then there was a probe that was widened, and especially with regards to news in India. Now, the other negative factors that we've had today was ExxonMobil under investigation, Fed Lockhart hawkish towards the end of the day, Fed Fisher certainly hawkish as well. We had concerns with regards to Russian terrorism, etc. We had Thomas Cook shares down -5%, -6% for the airlines. Certainly were hit. Car sales certainly down as well. And these are basically the overwhelming negative factors that we had. Even with a stronger Asian market, we failed to rally, and that was the overwhelming bearish argument. Okay, and that certainly is an indication of a potential top or an exhaustion in the market. Given the uncertainty, obviously, with regards to the NFP data tomorrow, that certainly contributed to a lot of uncertainty as well. Okay, so looking at the S&P 500, you can see what we sold off based on the hawkish tone of the number one, Yellen, and obviously further hawkish rhetoric, and given the fact that we are looking at increasing rates. Okay, going forward, looking at the daily chart on the S&P 500 now, I'm going to look at this market from a technical picture now, given the fact that I've explained fundamentals and basically the next move in this market. And the daily chart is certainly indicating a break of the rising contracting wedge pattern, which is a warning sign. Okay, weekly chart, we already know we've obviously rallied so substantially that we are obviously coming into turbulence and into resistance, and the daily chart certainly confirms that as well. As you can see, we've held that pivot high at 2114. A 60-minute chart of the S&P 500 certainly as a bear flag, so that's certainly something that we're going to observe. And you do have a H&S formation, so if I just take the pivot low here, connect it together, and you can clearly see that we have this H&S formation. Now obviously we've broken out this rising contracting wedge pattern. I'll leave this diagonal trend line in for now, just basically connecting the pivot high. So this pivot high to this pivot high, and that's basically what we're connecting at present. You have this left shoulder, you have the head, and then obviously we're putting in this right shoulder, and then obviously we're looking to sell off and move to the downside basically on the S&P 500. Now if we were to project the high to the low, and this is something that we're going to observe, and this would then confirm to you, I mean this is something that we just have to preempt to a large extent, given the fact that the NFP data is out tomorrow, and the overwhelming consensus is that the economic numbers are going to be better than excuse me, it's getting late. Okay, the overwhelming obviously analysis is that the economic numbers are going to be better than expected, then that would presume that the dollar would certainly start to move higher, and that would bring rate higher expectations forward, and therefore the market will sell off. Given the fact that we've had this stellar rally up to 21.14, the market's pricing all the good news, pricing all basically the best case scenario, and given the fact that the market has been rallying based on the expectations that the Fed would delay rate hikes, and all of a sudden that becomes a reality, and then you will get risk off scenario. That's basically the interpretation. That would then obviously trigger a H&S formation. As you can see here, we have an unfilled gap on the S&P 500 at 2052. Given the fact that we have, I'll just put this projection in now. H&S equals 20. What was the pivot high here? So we've got 2116 minus, take the neckline. The neckline is 2086 equals, that's a 20-point move, obviously. Sorry, 30-point move. So 2056, interesting, okay. And what is 2056? 2052 is your gap fill. So mathematically it makes sense based on just on the H&S formation. Okay, given the fact that we are putting a bear flag in here, we can see this bearish engulfing candle. This is based on Miss Yellen's hawkish stance, and obviously Fisher and Mr. confirm his name again, Mr. Lockhart, and obviously ExxonMobil, and weaker EU data, weaker German data. And I'll cross-reference this analysis with the German market soon, okay? So this is the scenario that we are expecting on the S&P 500, so certainly be aware of that. The 10-minute chart itself still making lower lows and lower highs, so again, looking for a lower low and lower high, and we are obviously adhering to this key diagonal trend line, and your resistance is seen at 2100, and therefore looking for potential new low on the markets itself, okay? S&P is certainly weak now. We can cross-verify the S&P with the IWM, and the IWN as well. So looking at the Russell itself, looking at a daily chart, the Russell, you can see that we've obviously held this key resistance zone here on the daily chart. Now looking at a 60-minute chart, the Russell, you can clearly see that we did have a H&S formation, but we did push back and above. Okay, so it's certainly negated that to a large extent. But the overwhelming pattern that we have now, given the fact that obviously we've held that horizontal resistance, is this this H&S formation. So the fact that we have this neckline here, okay, and you have your left shoulder, obviously it's gone in already, your head obviously we already know, right shoulder we're putting in now, and then obviously you have this H&S formation, okay, and that obviously is going to test the downside, okay, and certainly remains weak. So the Russell is confirming the weakness on the S&P 500, which is very, very interesting, okay? Very, very interesting. Now, as you can see here, Russell is obviously into resistance now, and this is basically where we see weakness, okay? We did have a rally of the bottom low, which is quite impressive, but we are facing resistance. So the Russell is confirming the weakness on the S&P 500. Now, let's have a look at the actual Dow Jones itself. Again, this is a H&S formation. Look at the daily chart. You have this rising, contracting wedge pattern on the Dow. Okay, we're obviously breaking below or breaking out this wedge pattern now. On the daily chart, 60-minute chart, you can see that we've clearly put in a H&S formation. Take the pivot low here. I mean, you can even take the pivot lows here, and you can draw this in. Draw a neckline in here. Okay, and then you're looking at a H&S. So this is your left shoulder. Oops, a daisy. I don't want that as default. I want the other one as default. Okay, so it's default. Okay, so basically we're looking at a left shoulder here, head, okay, being put in, and obviously looking for a right shoulder, and obviously the market selling off. Interesting scenario, yes, folks. Okay, so the Dow itself is certainly weak. Well, we can cross-verify that with the Dow transportation stocks, and you can clearly see in the daily chart, or the daily chart itself, we have remained weak. We failed to push higher. 60 minutes again. Certainly lower highs, and you are looking at a potential H&S formation there as well. So therefore a risk off scenario again for US markets. Now if we cross-reference that with the Nasdaq now and see what the health is with regards to the Nasdaq, Let's bring up the chart, the Nasdaq. Now this is probably the only tricky indices out of them all. Given the fact that we've taken out the pivot high at 46.95, the market has consolidated above 46.95. Now I did have a short on the Nasdaq, and it was plus 16, plus 17 at one time before it reversed and closed above. So that's very impressive. Given the fact that you have an unfilled gap below as well, that will certainly act as a magnet for the US markets and force the markets lower. But again, it is probably one of the strongest arguments or bullish arguments out of all the indices. The 60-minute chart, we have a HNS formation, so therefore certainly a bearish tone here, given the fact that you have the unfilled gap here at 46.50. Now if I take the pivot high in the Nasdaq is at 47.37, take it to the neckline which is at 46.95, you are looking for a 40-point drop, so therefore you are looking for this 46.55 region, which again makes sense, and obviously a mathematical sense as well. So this is an interesting scenario again, okay? Certainly multiple interesting scenarios at present, and this is your key diagonal trend line. Once we break that down, we go in with ferocity, and given the uncertainty as well with regards to the with regards to NFP, certainly a strong argument for it to break lower. Okay, now whilst we're here, we can quickly look at the Asian markets. Now emerging markets, you can see that we are into resistance, so therefore looking for potential thrust lower. The Nikkei, we've held the 200 MA, so looking for potential thrust lower, and the Shanghai index as well, putting a potential topping tail and holding that previous support equals resistance, and you do have an unfilled gap below as well, so therefore you are looking for a potential bearish move. But again, it's all dependent upon what the Asian markets do overnight. Okay, so very, very important to wait for them. Okay, so US markets certainly indicating weakness. Looking at the Nasdaq, the biotechs, you can clearly see here we've held that resistance level, held a diagonal trend line, and we are making lower lows and lower highs. If you take the pivot high from the 30.25, take it to the pivot low, obviously we're in slap bang into that gap fill, which is between 61 to 75%, and therefore you are expecting weakness, and that's exactly what we expected today, and that's, as I explained yesterday, that's why US markets would be weak, and that's exactly what occurred. We've broken out this with regards to semiconductors, we've broken out the upward trend line, you have put in a bearish engulfing candle, and we'll see exactly what occurs. Now there is an unfilled gap above which certainly needs to be closed, but for now this is certainly the resistance zone at present, so certainly indicating weakness on the semiconductors, which backs that up as well. Now looking at the actual Wilshire as well, you can see that again same type of pattern, doji breaking out, the rising contracting wedge pattern, and you have this HNS formation. So basically the uptrend is no longer intact, it's basically broken now. Okay, so you can clearly see here we've broken out, and you do have this HNS formation again. Okay, so left shoulder here, you're looking at the head, and obviously right shoulder, and down you go. So certainly indicating weakness there. Okay, so certainly multiple areas of resistance, multiple areas of weakness in the US markets, and therefore based on my analysis, using intermarket analysis and looking at the actual dollar chart as well, given the fact that we are expecting a move higher in terms of stronger economic data, you are looking at the 121.50 level on the dollar itself, and certainly looking for projection higher, given the fact that the actual jobs report itself, the overwhelming consensus is stronger, and therefore increases very high expectations, given the fact that we had Fisher obviously very hawkish, we had Lockhart very hawkish, we've got Yellen very hawkish, so they're obviously preparing us for a good number, and that's exactly what's going to ensue. Stronger dollar basically means weaker equities, and you are looking at a potential risk off tone. Okay, I think that's a summary of my analysis post or pre NFP. The setup certainly seems bearish, folks. Okay, and that's exactly the side that I will most likely be on. Again, Asian markets will dictate. I've closed my shorts, I'm back in the positive now. I was down 170 points this week, now I've managed to claw it all back, and I'm plus 21 points for the week at present. I'm going in flat overnight because obviously Asian markets can be very volatile, and we'll see exactly what occurs. If I see weakness in Asia, I will certainly be on the short side, and that'll give me the trigger and confirmation to shorts. Okay, the only concern I have is the Nasdaq at 46.95. If you can get the Nasdaq below 46.95, you are looking at one hell of a flush on US equities. Trade safe, and I wish you the best for NFP. Goodbye now.